With the S&P 500 at all-time highs, Bitcoin and gold rallying, and everything else seems to just be increasing in value, it almost feels like there's nowhere to put new money. However, in this video, I want to talk about the cannabis sector. And even though it's rallied quite a bit since the beginning of 2024, I think there's a lot more room left in this sector. The biggest challenge that's been facing the cannabis industry in the United States for years now is that cannabis is rated as a Schedule I narcotic. Other Schedule I narcotics include heroin, LSD, ecstasy, and more. In fact, there are some hard drugs out there like cocaine that aren't even considered Schedule I. They're considered Schedule II. Because of this, even though there are many states across the country that have already legalized the use of cannabis for years, if you're a business in the cannabis sector, you're not allowed to have access to bank accounts, credit cards, or credit lines. What this means is it's a cash-operated business. You haven't been able to accept credit cards. You can only accept cash or checks. It's been a crazy industry. To make matters worse, there's a law in the tax code called 280E. And what it says is any company that deals in Schedule I narcotics is not allowed to deduct any business expenses for their business. Now, I run a small business myself. I get to deduct anything that I buy for the business, whether it's computer equipment, photography equipment, anything like that. Additionally, I get to deduct my utilities and anything that goes to the operation of my business. I don't have any employees, but if I did, I'd also be able to deduct the cost of their salaries and any benefits I paid them off of my overall gross profit. Think about that for a second. Cannabis companies are paying not just a little bit more tax than they should. They're paying a ton because they're not able to make any deductions, in addition to having to pay the high income taxes on their gross profit. So why are the cannabis stocks rallying right now? Well, in August of 2023, it was announced that the DEA would be reviewing the classification structure for marijuana and probably will declassify it from Schedule I to Schedule III. Additionally, there are other catalysts that can help the space. If Congress legalized cannabis, or what's more likely, passed something that was called the Safe Banking Act, this would also enable the companies in the cannabis sector to access banks and be able to deduct their taxes. If the declassification happens, and it's expected to happen sometime in 2024, all the cannabis companies will soon be able to have access to bank accounts and credit cards and have dramatically lowered taxes. The entire industry, including the ETFs, is only valued at about $12 billion. If 280E gets dissolved and the cannabis companies no longer have to worry about it, it's estimated that more than $660 million will flow to the bottom line just from the tax issues. Additionally, I feel like this space has a lot of growth ahead of it. Cannabis was made illegal in 1937, and what a lot of people don't know is it was predominantly the alcohol lobby that made it illegal. The medical industry was researching all the different benefits to cannabis, and there are many, but they referred to it as cannabis. While in front of Congress, the alcohol lobby renamed it marijuana. And the medical industry didn't realize what was going on until it was too late, and Congress had passed a prohibition law in 1937 against all cannabis use or research for medical purposes. The alcohol companies are very aware exactly how bad cannabis will be for their business. For one thing, cannabis is significantly less addictive than even alcohol, but especially tobacco. And while there are likely lung cancer issues with smoking cannabis, if you ingest it, there are no issues that way, and the side effects are minimal. Many cannabis companies are working on developing drinks that'll be similar to alcoholic beverages, with controlled amounts of substances in it so that you'll know when you've had an effect from cannabis. In addition, where alcoholic drinks have a high calorie content, it's estimated that these cannabis drinks will have little to no calorie content. And the icing on top is while you will feel inebriated like you would from alcohol, there is no hangover the next day. And that's just the recreational use of cannabis. There are many medical uses that they're finding over and over again. A few years ago, a company I was invested in called GW Pharmaceuticals developed a drug to treat epilepsy in children, completely derived from the cannabis plant. This was such a successful drug that GW Pharma ended up getting acquired by Jazz Pharmaceuticals. It was one of the only non-recreational cannabis investments you could make, and it's been gone for years now. So what would I do if I wanted to get into the space? I already have several different investments in the cannabis sector, but it's a very volatile sector. So what I use primarily now are two ETFs. The number one ETF is MSOS, which stands for Multi-State Operators. These are cannabis businesses that will be able to operate in multiple states in the United States. So when everything is legalized, these are the ones that are likely going to grow the most. My more speculative play in the ETF space is CNBS. This is Tim Seymour's cannabis ETF. If you're not familiar with him, he's one of the traders on Fast Money and has been in the cannabis space for years now. I started investing in the cannabis space in 2018, on May 24th of 2018, when Canopy Growth first listed in the United States. My first buy was at $295.33, and later on throughout the year in 2018, it had a very exciting year. In August of 2018, Constellation Brands, the company behind Modelo Beer and a whole bunch of other products, announced that it was going to have a huge investment in Canopy Growth, which caused Canopy to rally significantly. By October, Canopy reached an all-time high here at $592.50, and it looked like it was going to be smooth sailing going forward, except that wasn't the case. Canopy absolutely collapsed, as did the rest of the cannabis sector in the United States, because it was simply too early. It wasn't legalized yet, so there really wasn't the possibility of it being an exciting sector yet. It had many years left ahead of it. Throughout 2019, Canopy Growth really meandered around. It traded in a range, it had highs and lows, and then in March of 2020, it really collapsed. During the pandemic sell-off, Canopy hit a low down here at $90 even, and it seemed like that was going to be its bottom. Because after that, Canopy started to rally. And when we went into 2021, and there was such a fervor around any kind of growth stocks, everybody really piled into cannabis, and the entire sector rallied spectacularly. Canopy got very close to its all-time high, but did find a stopping point here at $564.97. And that would be the last time Canopy ever saw highs like that. It ended up crashing spectacularly from 2021 all the way through to 2024. In addition to the entire cannabis sector coming under hard selling pressure, it turned out that Canopy Growth was mismanaged. They were spending money in the wrong places, they didn't know what they were doing, they had to sell off a whole bunch of businesses, and it just imploded. To make matters worse, I was adding to my Canopy Growth position all the way down because I assumed $9, which was the bottom from the pandemic sell-off, would hold, and I was incredibly wrong. Not only did it not hold, Canopy Growth went much, much lower. And as you might imagine, I didn't buy a stock that cost $300 when it initially launched in the United States. My initial buy was $25.33. Canopy Growth dropped so low throughout 2023 and 2024 that they had to do a reverse split. What this meant is for every 10 shares a shareholder like I held, I would get 1 share. The price had dropped down to 34.6 cents, and in order to stay listed on any of the major stock exchanges, you need to have a stock price of over $1. So this reverse 1 for 10 split was what they did. You get 1/10 of the shares that you previously held, but they add 10x to the price. So instead of a bottom at 34.6 cents, that made the bottom $3.46. However, as you can see in 2024, Canopy Growth continues to sell off despite the fact that there's positive news in the cannabis sector. And this is exactly why I don't pick the individual companies. There's no easy way to know which ones are going to be mismanaged and which ones are going to succeed. For much of the time before its 2022 sell-off, Canopy Growth was actually considered the flagship in the space, and now it's in doubt as to whether it will even survive. So what I choose to use instead is the AdvisorShares Cannabis ETF, which is MSOS, and as you can see, it's already up 22.86% year-to-date in 2024. Which looks great until you zoom out on the chart. From its all-time high in 2021 to where it is now, you can see that it's sold off more than 84%. In fact, from its all-time high to its low, it sold off more than 90%. And this is an ETF. These are supposed to be safe because they invest in all the different companies in the sector, which means they can avoid bankruptcy risk. But that's how bad this sector has been. So going forward, this is one of my biggest positions, and I'm still down quite a lot, even though it's rallied huge off of its bottom, and I was adding all the way down. Even after the significant rallies that we've seen, my position is still down 30%. One of the issues that's facing this space is institutions can't invest in it yet. Since cannabis isn't legalized, they're not allowed to be in the space, which means it is dominated by retail traders who have weak hands and algorithms that are trying to take all of the retail traders' money. Accordingly, I am a long-term investor, so I buy and hold. I don't get shaken out when an asset gets sold off. I add more to it. But even with all the confidence and conviction that I have in the cannabis sector, I'm still very careful when it comes to any investment. The primary rule is that you need to never risk more money than you can afford to lose entirely. Even though I think this space has huge gains ahead of it, it's always possible the whole thing goes belly up. It's not necessarily likely, but that doesn't matter. The way you mitigate risk is making sure you know exactly how much you're going to risk. Additionally, I always buy in stages. So I have buying targets, even if MSOS ends up selling off below where it is now, even if it sells off below its all-time low here at $4.92. I can keep adding to this position all the way down. But I know right now what my maximum loss will be if this ETF goes to zero. So if you're interested in investing in cannabis, there are a lot of different ways to do it, but you must remember this space is going to be incredibly volatile. When E280 is finally dissolved, it could be a sell the news event. It's always hard to know. It might take a long time for institutions to get into the space because it's burned everybody so badly. The growth investors got burned because the growth disappeared when all of the cannabis companies started pulling back on spending. Then the value investors got burned when the space got positively destroyed, and no one knows where these companies are going to get credit going forward. So it's an exciting space. There's a lot of potential going forward, but there are also a lot of risks. One of the most effective ways that I choose to mitigate risk is to know when it's time to take profits. Watch this video here for 3 of my top techniques to take profits in any position and how I use them to mitigate risk and make sure I lock in gains on my investments going forward.